And with that, we conclude what has been the Finance Minister's presentation of a rather gloomy medium-term budget. All of that coming from Parliament in Cape Town. We have a full team there for you that will be joining us to break down all those numbers that we've heard in the last hour. But I'm not alone here in studio. With me is political economist Lebohang Pheko, as well as economist Yumna Ibrahim, to talk through all of what we've heard so far. And Yumna, thank you both firstly for coming in. I want to begin with this economic growth projection, down now to 0.5. 8 months ago in February, we had 1.5%. So to say things are not looking good is an understatement, am I right?
Yes, absolutely. And what's most concerning about this is the slower growth. And yesterday we saw the unemployment figures come out, and we are now at unemployment rates that are the highest they've been in about a decade. So this low economic growth is an absolute concern in that it further frustrates the goal of employment creation. I would have liked to have heard a little bit more about employment creation in the budget, although there was they alluded to the youth employment scheme, and they said they're going to look for innovative ideas. So low economic growth, definitely not good for something that's so important. Employment creation, which we're really struggling with. We haven't seen much come out of the job summit. So we've had a job summit. We've had plans to raise employment. Now we've got low economic growth, and we've still got the problem of unemployment that is actually a catastrophic proportions in South Africa.
Ms. Pheko, you're nodding there, and going into this budget presentation, Tito Mboweni, some were expecting would be quite radical as far as slashing spending and announcing interventions to move us forward. Was he as radical as expected?
Not so much, and I think the budget is also, it's not only about finding fiscal balance, it's also about balancing popular sentiment and public sentiment, as well as investor and business sentiment. I don't think it would have behoved him very well to slash at all levels, mainly because at the moment he also needs a critical mass of people around him, and these ideas need to find some kind of expression. So we need to get a hold of where the industrialists are, where the producers are, where the agriculturists are. And for me, what I think is also lacking is specificity. So we're going to grow in particular ways, but we're not told which key sectors. That's always been a concern to me, because until we are able to name and to be consistent about which are the key growth sectors, because one cannot grow every sector in the economy. We must make decisions about whether it's going to be agriculture or whether it's going to be only manufacturing, whether we're going to be an industrial development complex in the pure sense of the word, building cars, building cell phones, manufacturing laptops, that sort of thing. And we do have a plan around that, in fact. So I think without that, it's very difficult to be incredibly radical. And I think also, I mean, what does radical mean in the face of quite deep austerity?
And Yumna, let's talk about the South African Revenue Service. SARS, we're hearing, is going to be short, 53 billion rand in its collection now of revenue. What does that mean then for a country with problems that are as expensive as ours?
So as the Minister of Finance alluded to and discussed, it basically means the budget deficit widens, because just like the average household, the government also has a budget. And if its spending is up here and its revenue is down here, then what they have to do is borrow the difference. And he also talked about debt service cost increasing. So if revenue doesn't pick up, then the budget deficit widens and the difference has to be borrowed. And then the money gets taken away from spending on things like healthcare and education and human settlements, and it goes to service interest on the debt, the borrowing amount. So lower revenue collection widens the budget deficit, which is unfortunate.
I'm going to ask you both to stand by, because I'm going to go to our team outside Parliament. Devin Murrigan from the ENCA Money Desk standing by with some of the immediate reaction, Devin, to that medium-term budget.
Yes, Temekele, good afternoon. We are spending more than we earned. It's that simple. That's the word from the Finance Minister today, with some figures that don't make for great reading. Our growth projections have been cut to 0.5%. Our budget deficit has now increased to the cusp of 6%, about 5.9%, which again means we are spending more than we are earning. I'm going to get straight into reaction. Kaskovadia from the Banking Association. I mean, could the Minister have said anything better today? We were expecting expecting this sort of stuff, weren't we?
Yeah, I think we were expecting it. He didn't have too many choices. I think the minister is very good at actually telling us we don't have time. We've got to take some decisions now and we've got to implement them. We've got to begin to spend less than what we earn. So I think he said 50 billion rand a year cut in government expenditure, public sector wages, what Parliament is going to be doing, SOEs and so on. I think that's a very good statement to make. I think we've got to see it. He's indicated that savings that were expected from February to now have not happened. So what we need now is, starting from the top with the President and his entire cabinet backing up the Minister of Finance to the hilt and ensuring that what needs to be implemented to achieve these figures is done. I think what is also very positive is that he's allocated money to the national NPA to jack up its capacity to actually put some people in jail.
I want to bring that in there because that's an important point for investors, isn't it? You got money to now catch the criminals, and then SARS gets 1 billion rand to collect more money. A good sort of partnership there between the two.
Absolutely. So I think those are good allocations, and they're good allocations to institutions that now have the leadership to actually spend that money well. And so I think that's got to be good news, including a good message to investors. But I think it's also good news that cabinet salaries and others will be frozen, and so there's an indication that from government itself, from the top levels of government, from the legislature, they lead by example. But at the end of the day, we're going to have to implement the decisions that the minister has actually put on the table to achieve the savings he predicts, so that we can actually begin to earn, and we need to fix up SARS so that we earn more than we spend, and we begin to actually make a positive impact on our fiscal situation.
Before I let you go, I got a few seconds. Is this budget speech credit negative?
Look, I think one has to look at the context. I think within the context, I don't think he could have done much better. I think that we need to follow this up with an announcement next week on who's heading up ESCOM. We need to follow this up with clear support for the sorts of statements that the minister has been making.
Fantastic. Kaskavadi from the Banking Association. Let's cross over now to Lindsay Dentlinger. Some political opinion, Lindsay, on this budget.
Thanks, Devon. I've got with me here Jordan Hill-Lewis from the DA. Jordan, I can guess not what you wanted to hear from the Finance Minister.
No, I'm afraid not, Lindsay. For all the tough talk of cutting the deficit and controlling debt, that's not what we saw today. Debt is going to blow out to 71% of GDP in the next few years, and the deficit's ballooning to 6.5% next year. And that means that over the next few years, we're going to be spending way more on interest payments than we are even on social grants, even on education and healthcare and policing. And we just think that that's an unethical decision to make, to continue to bail out failing state-owned companies at the expense of poor people who need healthcare and education and new schools and the like, and to continue to support a bloated public service wage bill, particularly at the top echelons, when you clearly don't have the money to continue to do so. So we are not happy with this budget at all. It doesn't go nearly far enough. And what disappoints us most is that he talked so tough in the days preceding the speech, and then it turned out that his bark was way worse than his bite.
He mentioned some austerity measures that will involve freezing of salaries for premiers, MECs and others. Is that enough for you?
Well, that's a good first and tiny step. I'm afraid that the money saved in that step is so small compared to the size of the hole that our fiscus is in, that he's got to go way, way further than that. We need somewhere around 250 billion rand in expenditure cuts just to keep the deficit under control. Today he announced expenditure cuts totaling around 50. So there's a huge gap between what he said we need and what he's delivered today.
He didn't make any more mention of cutting down the public service. That is something you wanted to hear today?
Well, we've given him a very credible proposal for how to do it in a way that protects teachers and doctors and nurses and the like, and make sure that they don't lose any pay or any jobs. And it's sad that he hasn't taken that up, but we hope that he has heard what we've said and that by the time that we come around to February, he sees that it's actually unavoidable.
He didn't go very far in saying that SAA will be privatized in some way, but has mentioned equity partners and possibly shutting down SA Express. Are you satisfied with that?
What we would like is a very clear statement, unambiguous, that SA Express will be shut down immediately, that it will no longer be a drain on the fiscus, and that can be a practice run for SAA. We haven't yet got that, but we are encouraged that at least he's talking about equity partners and saying that we need to, I think the word that he used, be liberated from SAA. That is absolutely true.
Thanks very much, Jordan Hill-Lewis. I'm quickly, sorry, Devon, I'm just going to have to steal a moment here with the EFF. It's not every day that they are speaking to us. I have Floyd Shivambu here. Floyd, just in brief, your view on what the Minister's remarks this afternoon.
Look, I think what the Minister did today was to announce a fiscal crisis, illustrated by the fact that South Africa's debt is more than 60% of the GDP. So meaning that we owe the private lenders more than 3 trillion rand. Now that is a fiscal crisis because there are no measures that were announced to curb the huge fiscal crisis that is confronting South Africa. There is no clear measures in terms of how the economy is going to be grown. So he spoke about a variety of issues and made a lot of correct admissions in terms of the crisis that is confronting the economy, but there is no believable and clear agenda in terms of how the economy is going to be grown, because even that economic recovery plan that he has produced does not speak to the structural inequalities and inability of the economy to create jobs and improve the lives of our people. So there is nothing that is really believable in terms of what he has said today.
So what credible structural plan would you have wanted him to say today?
We would have wanted him to pay detailed attention to industrial and trade policies. So South Africa currently imports virtually all finished goods and services and products. And that is why we do not have increased economic activity here, because we rely on importation of goods and services. So we need to change that fundamentally here in South Africa and have a trade policy that will say we domestically manufacture our own goods and products. That is how we increase economic activity domestically. But if your trade policy is that all the major manufacturers in the world will freely come and dump all finished goods and products here in South Africa, there will never be any economic growth, because you are not engaged in an economy. You are just consuming products from China, from Brazil, from the European Union zone, from the United States. So that is a problem of South Africa's economy structurally. And if you were to look into the number of jobs lost in the recent past quarter, it's mostly jobs in the manufacturing sector, because there is no clearer focus on industrial support and boosting manufacturing to create jobs and increase economic activity.
Floyd, just very quickly, I have to ask you, I know you were very vehemently opposed to that statement that the Minister made that users will have to pay for e-tolls.
We are opposed to e-tolls payment. We do not think that public infrastructure like roads should be on a user-pays basis. There must be a different approach to paying of e-tolls, not through the user-pay approach, because that is not sustainable. Already, there's too many taxes that are imposed on our people on a daily basis, and we cannot add roads as part of those additional taxes. And we're still calling on our people to boycott e-tolls. They must not pay e-tolls. No one is going to be arrested. Let us boycott e-tolls. They won't be able to arrest all of us if we do not pay for e-tolls. We must not do it.
Thank you very much. That's Floyd Shivambu appealing to members to boycott e-tolls. Over to you, Devon.
All right, thanks very much indeed, Lindsay. So the SARS Commissioner, Edward Kieswetter, with me. So the Finance Minister, Commissioner, has given SARS 1 billion rand. Is it going to make a difference? I asked you earlier if you would be happy. You said happy is not the right word there.
Well, I think we have to work within our means. Clearly, we will use all the money we can get. But I think the important thing is, firstly, to redirect our current efforts with our current resources to have a higher level of impact. And we know that currently SARS is suboptimal. And that doesn't require more money, it just requires a more diligent and focused approach to the work we do. Then secondly, to make sure we use the additional money to build in areas where we believe we need to beef up. So firstly, a concern that I have is in areas of specialized auditing, where we have found a proliferation of aggressive tax planning by corporates and wealthy individuals. A second area is also obviously an important protection of our borders, where we need to defend customs fraud and VAT fraud. And then thirdly, sadly, as a reflection of the level of lawlessness in society, we need to expand and improve our capability to fight tax fraud and just criminal syndicates who enter the system to fleece the system of. So companies are created purely for stealing VAT.
And that's the reason why partly he's given 1.3 billion to the NPA. How does that fit in with your agenda?
So exactly. So we work with the NPA. So wherever there is a tax fraud, clearly it's not just about recovering the monies and closing those gaps. It is also about ensuring that we have a good, thorough prosecution process to ensure that those who steal from ordinary people are brought to book.
Edward Kieswetter, thanks very much indeed, Mr. Commissioner. That's a Commissioner of SARS. Lindsay Dentlinger, back to you for more political comments.
Yes, thank you, Devon. With me, I have IFP Parliamentary Leader Mangosuthu Buthelezi. Prince, thank you. Good afternoon. Thank you for joining us. Your thoughts on what the the Finance Minister, very tough talk from him this afternoon, but is it enough?
I'm just happy myself that he has been brutally frank, because you see, we've been living on illusions all the time, you know. There's a big hullabaloo about a new dawn, and many people hoping that, you know, the new dawn is going to spread. But clearly, it must be clear to every South African that we're in a crisis in our country. And that, therefore, when you say that we're in it, all of us together, we are. And it's good that, in fact, measures are being introduced even for us who are representatives to actually cut down on the costs and not just theorize about it.
But are those measures enough?
Well, actually, in a situation where he is even predicting himself that we may be in a debt trap, one can't say it's enough, because just as today I heard from the chairperson of SCOPA that, again, we're bailing out Express Airline with about 300 billion. It's amazing that, for instance, the minister said that we're spending money we don't have. At the same time, we've money to pay out. You know, I think that is high time South Africa did what my friend Lady Thatcher did. He slapped down Arthur Scargill, the chairperson of Trade Union Council, and at the same time privatized, you know, all the parastatals. It's not sufficient to keep on talking about the intent to do something about them. What is delaying us from because the minister himself said that they should be standing on their own feet.
Thank you very much.
What is delaying us?
Thank you very much. I'm going to have to quickly wrap it there. Tembekile, back to you in studio.
That's ENC reporter Lindsay Dentlinger. She and Devon Morgan are part of our team that is at Parliament, getting both the political and economic reaction to the medium-term budget presented by the Finance Minister Tito Mboweni about 10 minutes or so ago. We're going to continue with that reaction. I'll come back to my guest here in studio, political economist Lebohang Pheko, as well as economist Yumna Ibrahim. And I want to pick up on the point that was made there by the leader of the IFP, Prince Mangosuthu Buthelezi, the leader in Parliament of the IFP, I should say, talking about state-owned enterprises and how we should perhaps look to the former UK Prime Minister, Lady Thatcher, Margaret Thatcher. Ms. Pheko, you don't seem too supportive of that idea.
Yeah, look, as it happens, I lived through Thatcherism, and that kind of form of very radical, stubborn austerity, you know, that her mantra was, Tina, there is no other alternative. And that actually restructured the economy 30 years ago to the extent where global economics have never been the same since, that and Reaganomics. And I think we should also be careful, because that also came off the back of structural adjustment, which basically restructured what states look like, how they behave, the sort sorts of powers they have in relation to job creation, in relation to things like currency exchanges and currency devaluation and so on, public wage bills. Very similar languaging that we're hearing now. And we've been hearing a lot about structural transformation, and we should be quite mindful that it's actually a form, to some extent, of some very conservative structural readjustment of our economy, which we may not be able to recover from later on. And I still would like to insist that we have to think about much more creative ways of revitalizing the economy and thinking about new avenues, streams of income, and new forms of doing economics.
And Yumna, I mean, you hear the words of caution against this wholesale call for the privatization of our state-owned enterprises, but in his own words, the finance minister saying today on South African Airways, for example, that SAA is unlikely to ever generate sufficient cash flow to sustain operations in its current form. So if not privatization, what does a relooked, reworked SAA have to look like, for instance?
Look, in my opinion, with regard to state-owned entities in general, Eskom, SAA, Denel, SABC, what they have been doing is they've been placing a great deal of pressure on the fiscus. And a lot of money has been taken away from, as I said earlier, spending on important areas like housing, healthcare, and being pushed towards bailing out state-owned entities. So what I did find very interesting was the mention of the state-owned entities will be given loans and not just a handout, and that loan at some point will need to be paid back. So what I think, hopefully, whether that will materialize or not, well, I hope it will make the state-owned entities hopefully a lot more accountable in the way they run their operations, etc., and make them run a little bit more efficiently. With regards to Eskom, there's the plan to restructure the entity, the details of the restructuring, etc. So there's the opportunity to restructure to make sure that these entities hopefully run more efficiently, in turn place less strain on the fiscus. And, if you get given a loan, then you have to pay the loan back. You've got to make a plan to make sure you pay the loan back and change the way you operate. So I think the idea of the loan is quite interesting with regards to state-owned entities, and let's hope it actually pans out as such.
In a moment, we're hoping to take you back to Devin Morgan in Cape Town as we continue to get the reaction of the many people there at Parliament for the delivery of the medium-term budget. I'm not sure if you are indeed there, Devin, but if you are, we were just touching on the issue of the ever-so-troubled state-owned enterprises. To privatize or not to privatize, still the question.
Yeah, I mean, it remains, Tembekile, good afternoon. But all indications are, you get that lean that the finance minister wants this route to start unfolding. But I want to take you through to something else now. The auditing regulator, IRBA, the CEO there, Bernard Agulhas, with me. We heard Edward Kieswetter, the SARS commissioner, telling us that, look, he welcomes the NPA support that it's getting from Treasury, 1.3 billion rand. And he says that perhaps they could go ahead and channel that money to fighting the auditing issues and irregularities in the private sector. That's where you come in. What do you think?
Fully support that, Devin. The good news to us was the money that's being made available to institutions like the NPA. If government can also make available money to regulators, to those institutes that are trying to address the corruption and are trying to address the misdemeanors happening in the financial sector, then we can also respond to that and try and eradicate the current corruption that's happening. And of course, if that is not in our economy, then it will grow the confidence and the trust in our financial markets, attract investment, and thereby grow the economy. And that is what we need at the moment to address the bad news of a growing deficit and the current the economy not being sufficiently stimulated. So if we can attract the investment, if we can create that confidence, and regulators can certainly do that, if the public can see that we are addressing those criminals, that we are addressing those involved in mismanagement, but we do need the capacity for that. So that was good news to us.
What's the big standout for you? I mean, you see that Tito Mboweni, the finance minister, again saying that, look, we're going to start trimming. Cell phone bills are too high. He's going to cap that. Just as an illustration, administration of what's happening on the public scene?
I'm comfortable with what needs to happen at the public institutions and in government to curb the costs. But I do think that a little more investment, not a lot of money, a small investment in regulators and in institutions like the IRBA will help us to address the current problems in the economy.
I'm going to leave it there. Bernard Gullis, thanks very much indeed for talking to us. I want to bring in here the head of the Centre for Development and Enterprise, Anne Bernstein. Anne, thanks very much indeed for talking to us. I mean, just your overall outlook of what Tito Mboweni had to say today. He was not part of an ANC-NEC briefing. He was the finance minister. Did he take on that strong position as an independent this time around? What was his posture like?
Look, the finance minister painted the terrible situation the country is in. We're going to have lower growth than anticipated. We're going to raise less taxes than anticipated. South Africa is in a desperate state. I think the minister was honest about our situation and he wants reform. I support the direction in which he is pushing, but today we got hints, we got rumours towards the budget in February. I think he's opening the ground and in some ways asking the country to back him, to put pressure wherever they can to get the kind of cuts we have to do. He's obviously politically constrained, but the key is going to be the February budget. He's saying, I've got to cut the expenditure in the state, but it's not crystal clear how that's going to happen. I hope he is not threatening additional taxes, and he's saying the government has to spend money much more efficiently, all of which I agree with, but we don't have enough certainty of exactly how he's going to do these things. So right direction, I think he's a reforming minister, but until we get the actions, it's going to be a bit of hot air.
There was a lot of talk about the Treasury's economic strategy plan. We thought we will see a newer version in this budget. He says quite clearly in there that he's glad it's supported by the President and they will consider legislation where appropriate, which means that plan is by no means closer to policy, isn't it?
Well, he calls it towards an economic strategy. He said he released a new version today. I haven't read it. The key is, does the President support the actual recommendations in what he is proposing? And we don't know yet. I'm looking for some big signals. We need a world-class CEO for Eskom. We need an SOE or two to fail. He said they should be treated as businesses, and we know that businesses that can't pay their bills have to go out of business. But now we need action. We need to see these things actually happening.
Anne Bernstein, thanks very much indeed for talking to us. So there you go, the commentary rolling in as far as the economic aspect of this budget is concerned. Lindsay Dentlinger, more political comment from you?
Yes, thank you, Devon. With me, I have the ACDP as Steve Swart. Mr. Swart, thank you for joining us. In brief, your view on what the Minister had to say this afternoon.
Well, the Minister painted the harsh realities of where we are as far as the economy is concerned, and the increase in government debt costs, the increase in budget deficit, and this largely is attributable to the slow economic growth. Remember, in February he said we should be at 1.5%, we're now at 0.5%, and that has resulted in an increased budget deficit from 4.3% to 5.9%, and this is ballooning over the medium term, where our government debt as a totality sits at 3 trillion rand, going up to 4.5 trillion rand. And these are staggering figures. So how do you address this? So he announced some aspects today, such as his economic recovery plan. But the question is, does he have the political will to implement those plans, given that COSATU and the South African Communist Party have already indicated that they are opposed to those plans? We support aspects of those plans, as we support Pravin Gordhan's unbundling of Eskom. Eskom, of course, presents a major risk to our economy, and we are outraged, having been involved in the corruption inquiries of the bailouts that are being given to Eskom.
How well do you think the austerity measures to trim salaries for MECs, premiers and other senior government officials, how well is that going to sit?
Well, I don't think it's going to sit very well. It is necessary, but in the broader perspective, it's actually very small amounts that will be saved. The larger aspect is, of course, the public service wage bill. That is massive. And the number of overpaid public sector wage earners that are there, and that needs to be addressed. There must be, when we have negotiations next year, inflation-linked increases, if there are increases at all, and we've got to relook at that. That's one of the major challenges at Eskom and SAA, is the staffing of those that has resulted in cost escalations. Those are issues that must be addressed in the short term. We can't wait much longer, because in February we're going to sit with a budget deficit that is increases, and as I indicated, this is an increase in snowball that we've got to have stern, firm decisions that might be politically unpalatable but are necessary to save our economy.
Thank you very much, Mr. Swart. Back to you, Tembekile. That's the ACDP's Steve Swart saying austerity measures are welcomed, but certainly not going far enough and won't result in the kind of savings that are required.
Lindsay Dentlinger, Parliament for now. Thank you. Let's come back to political economist Lebang Peko, as well as economist Yumna Ibrahim. They're with me here in studio now. And I want to go back to the point of the state-owned enterprises, Ms. Peko, because the finance minister said that what's going to happen now is that cash flow support for these SOEs will no longer be based on equity, but be more of a loan. But when you loan an Eskom, for example, that is 450 billion rand plus in debt, is battling to go from one month to the next, how are you going to get back any of that money?
It's when you anticipate a return on that loan, and I think the same has been said about the other SOEs. So if it were only Eskom, which is enough of a glut, quite a large black hole of nothingness at the moment, it's been an aggregation, including other state-owned enterprises, and we haven't really done enough to think about the sorts of models that are that could be explored again, so that to avoid and avert this sort of thing. I mean, some countries, do different things. Quasi-privatize or sell off some of the dividends, put some share offerings on the market, buy some equity, raise equity in different ways. Some of them are palatable, some of them are not, because, of course, I'm not in favor of austerity. But what is happening right now, which are just basically slush funds which are never going to be returned foreseeably in the next 5 to 10 years at current performance of the SOEs, is really not sustainable.
I want to come to you, Yumna, and talk about one of the other ideas as far as saving the SOEs, which is the suggestion that SOEs like SAA, Eskom cut jobs. We know unions are against that, but in a country where unemployment sits today at an 11-year high at 29.1%, where would those people go if they were to be let go?
So, yes, the unions would probably not allow too much of job cutting, and I would agree job cutting should be the last option. What the minister did talk about, for example, with Eskom, he talked about running the plant better, cash management. We also know that Eskom is owed a lot of money by municipalities, which they haven't been able to recoup. So perhaps before getting into things like cutting jobs, try and focus on efficiency, running it better, cash management. There's also the fact that Eskom is without a CEO. It's like a ship without a captain at this point. So leadership has to come in, and leadership has to now look at managing the entity efficiently, making sure they collect all the outstanding debt, etc., and then trying to be a little bit more of a going concern entity, and then thereafter they can look at, what else they need to do. But I wouldn't actually advocate for starting with job cutting. I think there's a lot more that can be done before we get there in terms of efficiency.